Yes, you're welcome to Restore Institute. My name is Kiden Sarah, and we are looking at our module called Cost Accounting. So we are going to look at our topic called Material Valuation. Material Valuation. So it can also be called material pricing. So we see that it refers to ascertainment or determination of the price of stock. So that when you're determining the price of a stock, that one is what we call material pricing or material valuation. So it is also referred to as pricing of material issues or pricing of store issues or costing of inventory. So we see that there are a number of factors to be considered in valuing materials issued for use from the store. So we see that what are the reasons for this price valuation? We see that it includes inflation. People need to determine this to be able to understand, because we have there is inflation. The prices keep on fluctuating, so you need to understand the price of the stock, and then also changes in the world commodity prices. So the commodity prices, they keep on changing, and then we also see that buying from different sources. If you buy the goods, we may be offering the same good, but then you're selling at a different price, and then also another person will also be selling at different price. So also differences in quantity discount, in quantity discount. So sometimes if you buy goods on bulk, they will not give you the same discount with someone who has bought who has bought only one good, or who is buying a small quantity of good. So it means that the percentages will vary. So it helps you to know what are the differences between if I buy goods on large scale and then if I buy goods on small quantity. And then also the closing stock, it helps us to understand the closing stock of finished goods, work in progress, or raw materials, and many others. So this needs to be valid for reflection in the balance sheet as a current asset. So the closing stock, it's always treated as a current asset. So let's look at the importance of valuation. We see that valuation helps us to be able to charge the product, job contracts, and then also processes for the use of materials. And then it also helps us to be able to determine the value of closing stock, to be able to determine the value of closing stock. So we have several methods of valuation, several methods of material valuation. So all these material valuations, they help us. By the end of the day, you can be able to calculate the closing stock. And then we also see that the method of stock valuation employed directly affects the amount of profit or loss reported for the accounting period. And then we also see that if the method chosen put higher value to closing stock, it will result into higher profits. And then the lower valuation of the closing stock will result into lower profit. So it helps us to understand which methods you can be able to use according to your depending on your business. And then we also see that valuation is needed for tax purposes. It can help us to understand how much are we supposed to pay, or to understand the amount that we are owing us from the tax. So we talked about, I said we have several types of calculating the valuation, but then we are going to concentrate on the free. So there are many, but then we are going to have free. So we are going to concentrate on free. That is first in, first out. That is FIFO. Then first in, last out. That is LIFO. And then we have weighted average method. So we are going to look at this method one by one and understand how to, if we use this method, how to calculate the closing stock or the price, the material pricing or the stock, the price of a stock. So we see that it's assumed, and this, let's look at first in, first out. So in this method, it assumes that the stock received first is consumed or sold or issued. So the stock that you receive first is the one that you're supposed to sell before you getting the one that you have received of recently. And then we see that this method assumes that the materials are used up in the same sequences as they are purchased. So they are used up in the same sequences as they are purchased. So what does it mean? It means that is the older material must have been used up first. So you're supposed to first use the older material before getting the newer material. So we see that the stock at hand at the end of the year is from the latest purchase. So the stock at hand, it's from the latest purchase. And then we see that it uses the price of the first batch received for all issues until all units from the batch have been issued, after which the price of the next batch received becomes its issue price, and then so on. So the process continue. So let's look at an illustration of how to come up with the price of the stock using FIFO. So we see that we have been given the company as Shalom Company Limited purchased the following stock in 2020 in the month of January to April. So we see these are the instructions, and then these are the what he purchased or what he issued out. And then they are telling us that prepare the store's ledger's account of the company using FIFO method. So we are going to prepare the store's ledger account. So let's get the solution. So when you're preparing, you have to first write the title of the company, the name of the company. So you mention which method you are using. So for instance, here we say Shalom Company Limited Store Ledger Account FIFO method. We are using FIFO method for people to understand that which method have you used. So we have the receipts, we have the column of the receipt, and then issues, and then balances. So under we have the date, you have to indicate the date, and then under receipts you put the quantity, the price, and then the amount. So under issues you do the same, you put the quality, you put the price, and then you also put the amount. Under balances you do the same, you put the quality and then the amount. So under balances, when we are using FIFO, we don't put the price. So the date, we go back to our illustration. In our illustration, we go back to our question. They are telling us that on 1st of January, purchased 2,000. They purchased 2,000 at the price of 1,000. At the price of 1,000. So for you to be able to get the amount, you multiply 2,000 times 1,000, which we get 2 million. So then you come here and calculate our balances. So you bring the quality which is 2,000, and then the balance which is 2 million. So in the next transaction that he did, he issued out. So he issued on 10th of, you have to put the date, on 10th of January, he issued out 800. He issued out 800. It issued out 800 units. So he put under quality. The 800 is under quality. So he's issuing out at which price? At the price that is 1,000. So the price of the goods that he purchased is the one that you're supposed to issue out, because this 800 is from the 2,000. It's from the 2,000. So what you do, you get the price which is 1,000. So for you to be able to get the amount we multiply to get 800. So the quality, how do you get the quality? Under balances. So remember you had purchased They have purchased 2,000. They've purchased 2,000 units. So they have purchased 2,000 units and then they issue out 800. So what is the balance? So you subtract 2,000 minus 800, which you will get 1,200. 1,200. And then you also get the balance of the amount. The balance of the amount, remember the amount, you have 2 million. So 2 million, then you issue out you had issued out at the price of 800. So what is the balance? The balance will be 2 million minus 800, which will give you 1.2 shillings. So let's go to our next transaction. So they're telling us on 6th of February, he purchased 1,300. 1,300 units. They've given us the price at the price of 1,300. So for you to be able to get the quality, you add. So when you purchase, you add it to the balance. Okay? When you purchase, you add it to the balance. So we are going to get 1,200 plus 1,300, which you will get 2,000. Sorry, you first have to calculate the amount. The amount will be, you multiply 1,300 times 1,300, the quantity times the what? The price, for you to be able to come up with the amount. So you get the amount. So for you to be able to get the balance of the quantity, you do the procedures that I've told you. You multiply, you add. When you purchase, you add. So when you add, you get 2,500. When you add 1,200 plus 1,300, you get 2,500. So you also do the same in the amount. You get 1,200 plus you get 1,200,000 shillings plus 1.690. So what you get is 2,890,000. So we go to the next transaction. They are telling us on 15th of February, issued out 1,000 units. So they issued out 1,000 units. Remember we are using the method of FIFO, first in, first out. So we have to first make sure our first stock gets done. Our first purchase get done before us going to the next purchase. So when in our next purchase, what does it tell us? They're telling us that we first sold 800 units. We sold already 800 units. Remember, we have 2,000 units. So when you sold 800 units, what was the balance? The balance was 1,200. So it means that we are going to sell this 1,000 at the price of the first purchase. So what you do, you put the price of the first purchase, which is 1,000. So 1,000 times 1,000 to get the amount, we get 1 million. So 1 million, we are going to get the balance of the quantity. Remember, when you issue out, it's going out. So we need to find out how many units you took out. So we get the 2,500 minus 1,000. The 2,500 minus the 1,000, which will give you 100, which will give you 1,500, which will give you 1,500. So you also do the same in getting the amount. You get the balance here, which is 2,890,000 minus the 1 million, which will give you 1,890,000. So we go to the next transaction. What was the next transaction? They are telling us on 30th of March, issued out 600 units. So they issued out 600 units. Remember, we are using FIFO methods. We are using first in, first out. So what you're going to do, you have to look at our first purchase. Have we finished all our first purchase? Yes or no? So our first purchase, remember, we sold 800. Then we sell again you will sell again 1,000. So what is the balance? The balance is 200. So in this 600 that we are issuing, we are going to first sell the 200 at the price of the first purchase. So which is 200 at the price of 1,000. So you multiply to get the amount which you will get 200,000. So then to get the quantity, that means that the balance of the quantity, it means that we are going to subtract. We are going to subtract the quantity of the quality that you issued minus the balance that was remaining. So we said 1,500 minus 200, which will give us 1,300. So to get the balance, you also do the same. You get the 1,890,000 minus the 200, which will give you 1,690,000. So we have sold 200, the balance of 200 of the first purchase at the price of the first purchase. So what is remaining? Remember, we are issuing out 600. So it means that we are remaining with 400, isn't it? We are remaining with 400. So this 400 now we shall sell it at the price of the new purchase. So the new purchase went on 6. So what we are going to do, we are going to sell the 400. You write the 400 at the price of 1,300. So when you multiply, you get 520,000. So 520,000, for you to be able to get, we are calculating, we need to get the balance. So you subtract, you say 1,300 minus 400, which will give you 900. So the 9, and then also the amount, we need to get the price of the balance of the amount. You get 1,690,000 minus the 520. So that is 1 million, which we shall remain with 1,170,000. So let's go to our next purchase. They're telling us in our next purchase was taken on 25th of April. 25th of April, they purchased 3,000 units at the price of 1,450. So when you multiply to get the amount, you get 4,350,000. So for you to get the quantity, you do the same, you add. So when you add, when you add the 300 plus the 90, you get plus the 900, you get 3,900. So when you also add the amount, this is what you get. You get the amount, the last amount, plus this one, the one that you've gotten from the purchase, which will get 5,520,000. So let's look at our next transaction. Our next transaction is on 30th of April. What was the units that was issued out? The units were 2,000. So the units were 2,000. So 2,000, remember we are calculating first in, first out. First in, first out. So remember that in our purchase, we had remained with 900. We remained with 900. Remember, we have issued out 400. We issued out 400 from there. That is purchase from the purchase that we made, from the last purchase that we made. So it means that we are going to first make sure that the other purchase gets done. So we get the 1,300 units minus this 2,000, minus the 400. We had already issued out 400. So what is the balance from the 1,300? The balance will remain 900. So this 900, we are going to first issue it at the price of the last purchase, the first purchase. So which is 1,300 at this price. Then we multiply to get 1,170,000. Then the balance, you subtract 3,900 minus 900, which will get 3,000. Then you also do the same to the amount. To get the amount, you get 5,520,000. 520,000 minus 1 million, which you will get, minus 1,170,000, which you will get 70,000, which you will get 4,350,000. So we go to our remember we have sold the 900. So what is the balance? You remember you're issuing out 200. You're issuing out 200. Then you sold 900. So the balance will be, for you to be able to finish out issuing, the balance will be 1,100. So this 1,100, you're going to sell it at the price of our new purchase, our last purchase. Our last purchase, it was 3,000. The price is 1,450. So it's the one that you multiply and get that amount. So after getting this amount, to get this, you subtract 3,000 minus 1,100, which you will get 1,900. So to get the amount, you do the same. You get 4,350,000 minus 1 million, which 1,595,000, which you will get 2,755,000. So this is how we calculate. So it means that this is the closing stock. The closing stock on 30th of April, remember they have told us from 1st to April. So on 30th of April, we are able to close up with 2,755. So let's calculate. How do we calculate the closing stock outside, like to find out? So your closing stock here, the one that you've calculated, it should be the same with the one that is, with the one that is there. So we see that in our closing stock, we see that the closing stock as at 31st April 2021 was, so we come here and determine it was, the closing stock was the balance, the balance that you remained with was 1,900. 1,900. So which was valued at this one. So to get it, it means, how do you get this? It means that you get this amount, you get 1,900, the clothing stock of 1,900. What was our last price? Our last price was 1,450. So you get the 1,900 times 1,450. So which you will get 2,755,000. So it's the same. Don't you see that it's relating with our closing stock here? So if it is not relating, it means that you've made a certain blunder somewhere, or a certain error. So you've made an error somewhere. You need to check up with the values and then your calculations, all the process. So how to get the value of material used? So to get the value of material used, you get the total value of material purchased in the period minus the value of closing stock. So the total value of the material that we purchased, you add the amount, the price of each purchase. So when you add, we got 8 million. When we add the amount, we get 8,040,000. We subtract with the closing stock, which is 2,755,000, which will get the balance of, to get the value of the material used was 5,285,000. So that is how we come up with the method. That is how we calculate the method of using to come up with the value of the stock, the price of the stock using FIFO. So let's look at what are the merits and demerits of using this method. We see that it is simple and easy to operate, and then we see that stock is valued at historical cost. So on unrealized profits or losses occur. So we see that it provides a fair and realistic commercial valuation of stock. It also ensures that the older materials are issued first, reducing the risk of obsolescence. So we also see that accepted for accounting and taxation purposes. So you can use it for, it is accepted for accounting purposes and taxation purposes. Let's look at the demerits. We see that it can be burdensome to apply at times. So it is, you see the procedures, it involve a lot, so it may be a burdensome or a tiresome. And then we also see that issued materials prices may not reflect current market or economic value. It is not reflecting the current prices or the economic value, because since you're going with the price of the first purchase, you're not going with the price of the current. So for instance, in our economy currently, the prices fluctuate. The prices fluctuate every time. The dollar is, today is up, tomorrow is down. So do you think that it may favor you? No, it cannot favor you. It means that if you're going with the price of the fastest purchase, of the fastest stock that you've stocked, and then you're selling them, it means that you may end up making losses. So we see that the issued material prices may not reflect the current market, which will lead to making of loss.